What's going on, everybody? Welcome. It's your boy Crypto Wolf, and today we are going to get into some Market Cipher indicator breakdowns again. We're going to be talking about the RSIs and the DBSI. So let's get into it. All right, over here we got the Bitcoin chart. I got the 5-minute open real quick just because it has a little more action going on. Things are changing, but it doesn't really matter for what we're doing. I'm going to start with the DBSIs. And if you are not familiar with what that is, that's the dual band strength index indicator. And I talked about it a little bit in a previous video, just to summarize, but I'll get into a little more detail here. So what we have are these little numbers going above and below the candles. Let's see if you can see that. Zoom in a little bit here. Now you'll notice it doesn't go all the way back throughout the chart's history. Only goes back, what do we got here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Looks like about 20 candles, maybe 25. And what this is basically saying is your bullish and your bearish strength per candle, depending on the time frame, and it works on any time frame. And if you look here at the current candle, you'll notice we have a 19 and we have a -3. And you'll notice that one is yellow out of all of these. That's basically just indicating the stronger number on the current candle. So if this bottom were 19 and the top were -3, then this one would be yellow. And what this is good for is helping to judge like reversals in trends. Specifically, if you look here, you'll notice the numbers are going higher, come down a little bit, but 17 is still a strong number, and I'll get into that here in a second. But then you notice it turns to 10. Meanwhile, we're going from -5, -5, -4, -3, -2, 7, 15. So as the trend is getting closer to reversing, you'll notice the numbers up here, the bearish numbers, are getting larger. And you'll notice the bullish numbers are getting smaller. Now, at least from my experience, I have noticed that probably anywhere between 14 and call it 16, 17 are usually very good numbers to have. They're indicating that you have some strong pressure, in this case on the bullish side. And you can kind of see here we were coming down a little bit, started to weaken, got that 17 and then went down to a 10 as this starts increasing. Then we hit the 15, and right about the 15 we're starting to get more pressure back to the upside. I don't know what that was, don't ask me. And by the time we got, this little doji star here, we got the 18. And 18 is a very strong number. As you can see up here where we've got 3 17s in a row. The 17, 18, 19, and you could probably lump the 16 in there too, is very good, solid, like sustainable bullish pressure. Obviously, it's not going to sustain forever. We went from the 17 to the 10 here after it started to weaken or reach exhaustion. But as you can see here, when we're coming down, increase, we got that 15. That was a terrible circle. We got that 15, which is right at that strong pushing a new trend number. And you can also have where, you go up and you come back down, but then you keep going up, especially if you have enough pressure in one direction to kind of make it through these little pauses to where, you're coming up, but rather than coming down, it's just enough to go sideways, maybe continue going up, and you'll see those numbers go down sometimes in a spot like that. And oh, I should probably explain this. So the lowest number is a -5, and the highest number I have seen is a 30. I think originally for a while I was thinking it was 28. I think that might be what's in the like official tutorial, but as you can see right now, we have a 30. We also have a 29 there. So apparently it can hit 30. Now, one thing that is fairly common, and this is a good example right here, is that when you immediately start getting into the 20s, especially 20, 21, 22, 23, seems like it's those ones a lot. It's not necessarily, a nice, long, sustaining trend. It's not a big pump. You tend to just come out hard, right from a 3 into the 20s, and it just kind of runs through its gas fairly quickly, burns out, starts coming back down. But as we saw here, and again, with anything with trading and charts, nothing is 100% of the time. That's where you kind of learn to read more than just one indicator. You want to take it into consideration with, other things like, your Market Cipher B, your other symbols and indicators on Market Cipher A. But just since we're talking about this specifically right now, you pay attention here, 15, 18, 21, 24, came down 23, 24. Not a big deal if you're fluctuating one number. I wouldn't, just exit a trade thinking, oh shit, we're turning around. Get back up 25, 6, 29, 30. And from there, we pretty much sustained those 17s for 15 minutes straight, which is very nice. I actually happened to have been in a trade right here, and I entered a little bit below this peak, so somewhere right in here. Exited, yeah, right in that area, 37,430. And another thing, obviously, when you are trading, you want to be jumping between time frames. I wasn't even actually trading on this one. I think I was mainly up here on the 8-minute, but again, I was coming back down to the smaller ones just to get a closer look at, okay, what's happened in this second, because let's go up to the 30. Holy crap, that's big. All right, we're up here on the 30, and again, we're pumping 16, 17, 18, weakening a little here with the 11s. So I'm like, okay, I was starting to pay attention, and it wasn't fast pumps. It was, as I was watching this thing, it would kind of just chill for a minute, then start going up, just chill for a minute. So at that point, I was really keeping an eye on it. And when we were getting up here is when probably, between these two candles, when I started going back. Oh, this is more realistic. Yeah. So when I was up here, started going back to the lower time frames. And again, taking other indicators into account, we had our triangle followed up by the green dot, had 3 of the yellow diamonds. Okay, so we're still pushing, don't give up yet, even though we started to stall a little bit right here, stayed in it. And again, once I saw this coming down, also saw the VWAP coming close to 0. Okay, took some profits. Looking at it, I'll probably let it go for now. Just coming out of the longer time frames. VWAP's coming up a little bit. These are coming together, even though we do have a general down, but still kind of sideways direction. So it's something to pay attention to for the moment. Momentum is coming up. Money flows. I guess technically down a little bit, but really just sideways. I mean, this peak's lower than that one's lower than that one, so we'll see where it goes. But that is the DBSI. And as you can see, it's very helpful when you are in the moment, like while trading, to see, okay, are we starting to lose strength? Or are we gaining strength? How much strength? And that's definitely useful when you're trading, especially scalping, on these higher time frames. It can be a little tricky because obviously there's a lot can happen within like this 1 6-hour candle. So you don't necessarily want to take this as gospel because, obviously we're up here sixes. At that point, you're thinking it can weaken and reverse pretty much any moment. And we're already, up to 4 on the bearish. So anytime you're past 0 on the bearish, you definitely want to keep an eye on it. Let's see. Again, it looks like we're definitely heading up here. We're crossing the 0 on the VWAP. RSIs are looking up a little bit. So, on these higher hourly, or I guess you could even call it like mid time frames, depending on if you're looking at weeks or months, I'd say we're looking pretty decent. The only thing I don't like is the money flow here is getting pretty low, but hopefully this could be a bottom. We had a little peak here, sustained for a bit, maybe a lower peak, so you'd almost have some divergence going on the money flow. Yeah, hopefully we're looking pretty good right around the spider line, so we'll see what happens with that. But if you have any questions about DBSI or want to know more about it, feel free to drop it in the comments. But let's move on to the RSIs. Now, if you're not familiar at all with what RSIs are, they are a relative strength index. And essentially, it's a good gauge of, the overall strength of whatever asset it is, in this case, Bitcoin, and fairly specific to the time frame that you are on. Now, the regular RSIs in TradingView are going to be your just straight up standard RSIs, run of the mill, plain Jane. Now with Market Cipher, these ones are a little modified, and you'll notice that there's 2 distinguished lines. And you have this pretty little purple guy here, and you have his fancy feller that changes colors from time to time, going from red to green, green to red, going up and back in bed. So what this guy right here is the regular RSI, and the red and green is essentially, they're not specifically, but the red and green is the stochastic RSI. And they're both calculated a little bit differently. From what I gather, the regular RSI is like also an altered regular RSI. In the little tutorial manual, it even says, smooth stochastic, I think, or something like that. Not really important. What is important is watching what they're doing and knowing what it means when they're doing that. So in this case, you can see they are very, very spread apart. And I'll leave that joke out for them. But you can see, okay, the lines are on top of each other. They're tight. They're walking buddy-buddy. They're inseparable. And then we come over here. Oh, and they start to spread apart. One of them was hitting on the other's girlfriend. They do need some time apart. It's getting to be bad blood. What that means is it is a sign of weakness. So in this case, we're coming up, price is going up, pumping a little bit. It's steady. It's, not parabolic or anything. Money flow dipped down into the red. Again, not terribly strong. So we're coming back up at this point, even though it's not a great example. It's basically flat, but we're coming back up and out of the red money flow over into the green. But as we're coming up and out, these RSIs are splitting. And so, if we're here in the moment, just living in the moment, let's say we're right here and we see that big split in these RSIs. I'm thinking to myself, all right, this is not a strong pump. It's weak. It's not going to be shooting for the moon. If I'm going to trade, I'm going to be vigilant to watch for other signs to get out of it. And as you can see, we just spread further. We reached this point where, all right, VWAP was coming down. Didn't look terrible on the momentum, but at the same time, we're starting to come down a little steep. With a spread like that, I would be particularly cautious, and as soon as we started coming down with it spread that much, I would have been looking to close. And as you can see, that would have been a very good idea because that was a pretty big move in the VWAP. It had a pullback that was even lower than this previous low. And then after that played out, kind of came back generally close together. And if they're a little bit split, it's not terrible. As you can see back here, that they never really stayed together, but they were close. And that just kind of kept going. It kept sustaining. Even this wasn't terribly spread, but money flow is coming down, so that kind of made the trend. And over here, as they stayed together, typically if you are heading up, not the greatest example, but they're generally close together. Going up, you can see it's definitely more vertical than, say, this was. We started coming down. Already we started splitting, so this downward momentum was not very strong. Made a turnaround right there. Started coming back together. A little sketchy here and there, a little dip there after it came up a little, but generally speaking, not what I'm it pretty much just kept going for a while, stayed strong. RSI was hanging out up here, and this is your 100 line. When your RSI is hanging out up there in the wild hundreds, it's got some strength. There we go. That's kind of peak strength and conditioning. It's up there. It's working out. It's getting big. It's hitting up Planet Fitness. And again, down here is your lowest. So another thing to watch for is when we're up here, and you can see it's starting to trend downward. Another thing we want to watch for, especially if it's over time, getting lower and getting lower, even though the price is getting higher. You want to start paying attention if you're in a trade up here, or if you're looking to short. These are getting spread. It's losing strength. It's going sideways. Finally, you get this last little hurrah before dropping off. And then down here, we stayed together the whole way down. It was pumping strong, kind of bouncing. And one thing I've noticed is you get sometimes these little V's, and it won't always stay that way. Like going back into the past, looking at these charts, you won't always see it going back there, because even by the time you finish the candles, you end up getting these wicks. It comes back up a little bit. But if you are, say, you're waiting on a move, and you get these peaks, they will come very close to zero. And if you look here, The more I move it, it goes away. If you look at those numbers right there, those are your RSI values. So when you see those getting very close to zero, like right here, we're at 6.5. Over here, 5.2. It's tough to go back and find an example that's real close to zero, but they will come in some cases very, very close to zero. But then, you come back up and you get a wick, and what ends up being confirmed after being printed in here is, you'll have a low number, but it doesn't often end precisely where it was at that 0 point. But when you do see that and you spike down to zero, and then you come back up and keep going, you are generally getting close to the bottom. And you can see like this one, okay, was still up there in the tens. Even the green one was about 6. This one about 5.3. And I'll bet if you were watching at the time, this one probably came lower before this giant doji star with the huge wicks. This one probably came close to zero. And when you see that, it's a good indicator that, okay, you are either at the bottom or at least close. Like you might hit zero or close to zero on, say, this candle right here, even though you kind of come back and touch off one more time. But at least when it's getting to zero, you're in that range of bottom. Again, not 100% guaranteed, and it also depends on your time frame. If you're on a really low time frame and you're hitting zero, I mean, you could bounce around a little more, come back down again and hit another zero, and you would go back and look on a random bigger time frame, and you're seeing stuff like this where it's bouncing around, Let's say our lowest point in price was right here, but again, giant wick. So if you're watching this in live time, that was probably the lowest RSI point, but even still, came back and spiked down again here, but in this case, it was a little bit higher. And then we had that crazy crash and a nice little V-shaped pump back up. That was an interesting day. But the biggest thing to keep in mind, though, is the spread or the no spread. Those are your two strongest indications when dealing with the RSIs. Again, you can see it here. They're real close together when they started coming back up. At that point, that was a good sign that as long as they stayed together, it would likely keep going. And even here, stay together, kept going. Okay, now we're starting to spread. It's losing a little strength here, but it picked back up a little bit. Again, hanging up here in the 80s, 90s range. You could even say it started weakening up here as it got a little bit separated, but even this small gap, it's not enough to go on by itself. You're going to want other indications as well. Seeing these VWAP waves getting real small on the top side here, decreasing. Not much of a divergence here, but again, this is what, a 40-minute time frame, so you would have been watching on other things too, and you're going to see, especially something like this, I guarantee we go back and you would have been seeing some divergence. Where was that? I don't even know, but here again, a little bearish divergence, peak back up a little bit, but definitely a weaker momentum wave right here. At that point, momentum's weakening. The general direction of the RSI is heading down about here. Good chance that your money flow is coming down. That's going to break to the downside. And that is about the gist of it with the RSIs. Oh, now the colors between the green and the red, it's not 100% specific, so you don't want to bank on it all the time. But I believe it's akin to being oversold, overbought. But it really, I don't know, it really isn't. I don't necessarily gauge anything off of that. More or less where the line is what I'm paying attention to. But you will notice, you know, when we're off and we're pumping like this for a while, it's in the red. It's always in the red when you're doing this, especially when it's up high up here. But when you get little patches of green right there, I really don't have a good explanation for that. You know, oftentimes when you come down, you will turn to the green after you kind of exhaust that main downward momentum. Let's see here. But no, that's not really the case either, because look, we're red here. Big dump. Turn green, but we're just hugging the bottom. No upward strength. Just skipped leg day. But yeah, between general direction and the spread and where it is on the scale from 0 to 100, that's what you want to be paying attention to. Like here's an interesting example. RSI strength coming up, coming up, coming up, coming up. Take it along with your money flow here, your VWAP. Getting spread apart, just didn't have the gas. Gave it one more try. Then started coming down close together, had the strength until it was going. Spread started to weaken. Nope. Gained some more strength. Nice little dip in the money flow there. It's a nice little straight track on the momentum waves, and we see what that did. Yeah, I remember I was watching that. Yeah, it came right back up to the previous high over here and bounced off that fib line and kept going all the way up to the spider line. If you don't know about spider lines, go watch the video I made about those. As you can see, very useful. Very useful. But I will leave it with that. So everybody have a fantastic day. Any questions, let me know. Anything you want to see or know about, drop it in the comments. We'll make a video about it, even if it's not necessarily Market Cipher. Once we get through some of the last parts of Market Cipher here, we'll probably start getting into other indicators and things in TradingView. Start hitting up some Fibonacci retracements, maybe some other types of these Fibonacci, I guess you call them indicators, or more tools. But yeah, I'll be easy. Have a good one.